Robinhood's Hood Week is here. 12 days, 3 legendary offers, and unlimited bonus amounts. Earn 3% on IRA transfers with Robinhood Gold, 2% on transfers with at least a $10,000 margin balance, and 1% on brokerage transfers until October 27th. Hood Week ends soon, so visit Robinhood.com/HoodWeek. Investing is risky. Bonus offers subject to terms and conditions. Visit Robinhood.com/HoodWeek for more information. Margin is not suitable for all investors. Robinhood Gold is offered through Robinhood Gold LLC and is a subscription offering services for a fee. Brokerage services offered through Robinhood Financial LLC, member SIPC, a registered broker-dealer.
Good afternoon. Let's do some business. In fact, we're doing it live right now, right here, doing more at 4 weekday afternoons. We get right down to business with the news-driven hour right after Ben Shapiro and just before the 790 KBC News Blitz with Randy Wang at 5. Mottek On Money, live on the air on 790 KBC, streaming live online worldwide at kbc.com. And the on-demand Mottek On Money podcast, kbc.com, Apple, iTunes, and all your favorite podcast platforms. Rough day for the markets today. In fact, the Dow saw its biggest drop in nearly 2 months. The Dow and the S&P 500 both finishing lower for the third session in a row, joined by the NASDAQ, and some of the big tech names pulling back today include the magnificent one NVIDIA down more than $4 today at $139 and change. Apple down 5 at $230 and change. This has investors looking at these rising Treasury yields and the possible outcome of the November 5th presidential election. Yep, coming up in less than 2 weeks from now. The Dow coming in for a closing loss of 410 points, settling at 42,515. That's the biggest one-day drop since early September. The S&P 500 closing lower by just about 54 points. That was the worst performance since earlier this month. And the NASDAQ down nearly 300 points. That was the lowest level at 18,276 seen since October 8th. The earnings parade continued today with IBM reporting mixed quarterly results after the closing bell today. Its shares were moving lower in after-hours trading. Big Blue, IBM, taking a hit after hours, down about $6 now at $226 and change. It had actually closed about 50 cents today to $232 and change. McDonald's taking a big hit today, down more than $16 to about $2.95. The Centers for Disease Control and Prevention investigating an E. coli outbreak tied to people eating quarter-pounder hamburgers at McDonald's. Analysts and experts saying it's inevitable that the fast food giant's business will suffer as a result. According to MarketWatch, the price of gold, meanwhile, hitting a record high this week and right now trading at or near all-time highs. Gold is still simmering, shivering, and quite a luster for gold today, hovering around $2,730 an ounce, pulling back a bit today, about 32% or $650 an ounce higher so far this year. We're keeping a close watch on the price of gold. Silver also seeing a big run-up, just now below $34 an ounce, up about 42% since the start of the year, which is a gain of nearly $10 an ounce since the start of 2024. Gold and silver in the spotlight. And we'll talk about that live later this hour as I talk gold and silver with Joe Morgan at United Gold Group. How's the TV and movie business doing in Hollywood coming off the big actors and writers strike last year? Well, we'll get an update on that from someone who follows the business very closely. Joe Chianese, Senior Vice President and Practice Leader for Production Incentives at Entertainment Partners EP, as it's widely known in show business town based in Burbank. But first, on your money, the markets, the economy, and the whole works now. Joining us live now is Brian Perry with Mint Asset. Brian Perry, the Chief Investment Strategist and Portfolio Manager at Mint Asset Management at mintassetmanagement.com. Brian, thank you very much for stepping up to the plate here on this big down day here for a change, the worst we've seen in nearly 2 months. Give us your assessment of this latest market action here.
Thanks, Frank. Always great to be with you. Yeah, there's a little trepidation today with the market here coming into the hump day here for the week here. There's the sentiment now is leaning toward a Trump win here by those that speculate on such things in the market. And quite frankly, there's actually some rising optimism by the Republican Party. There could be a sweep, for the House and the Senate as well. So this is hitting big cap tech because they're big pro donors to the Harris campaign here. It also implies possibly more tariffs on China. So there was just a bit of a give back trade there. For the Mag 7 and for big cap tech, for those that especially are critical of Donald Trump. So that's part and parcel what happened here. Also, you had this dollar here has really moved up strongly here. The dollar index has moved up 4%, which is huge for the world's reserve currency here, moving from 100 to 104. That makes our exports more expensive going overseas here. So that's a damper on multinational companies here, which is another reason why you saw kind of broad-based selling here in a lot of the big multinationals. And that also is a good reason why gold is also pulling back, because when your currency is gaining strength, then precious metals tend to not be as such an effective hedge. So that's going on here. And also you had the bond market here continues to really press higher here. We had the 10-year close at 4.24. Both candidates, Trump and Harris, are promoting platforms here that are really high on spending and low on deficit reduction. And again, more on tariffs here by Trump. So that's weighing on the bond market as well. And the economic data of the last week or so has been a good to mediocrely, better than expected. So that's all together is weighing on bonds, and the notion that the Fed is only going to cut maybe a quarter point, maybe even not cut at the next meeting here, depending on how the next round of data comes in. So that being said, earnings season here is delivering up a good smattering of beats and raises here by a lot of companies. The banks and money center banks started out very well here. And so far this week, some high-profile names here have done well. GM has come in with good numbers here. People still like their combustion cars. Philip Morris hit a new all-time high based on smokeless products here. We had Seagate Technology put up good numbers here. Texas Instruments put up strong numbers here. Apparently, a lot of the other non-AI parts of the chip industry are starting to bottom out. That long-term cycle is starting to turn higher for a number of industries here. AT&T had good numbers here. The stock hit a new 52-week high. After the close, Lam Research, a very important chip equipment maker, put up great numbers here, and the stock's up higher in the after hours here, which is helping to quell the fears that the semiconductor equipment stocks would not do well after ASML really disappointed last week. Tesla after the close, stock's making a large move higher here, up 10% in the aftermarket here. The company posted better free cash flow than forecast. Their margins here was what the big story was. They came with 18% gross margins, which is 2 points higher than the prior quarter here. So that's really the name of the game for Tesla here, is that when everyone else is losing money on EVs, Tesla still is their costs have come way down. So to make these cars, and so the notion of also a sub $30,000 EV out middle of next year is still out there. No news on that yet, but the idea that Tesla can still raise their profit margins here in this environment was bullish for the stock here in the aftermarket, and it's showing up. And I think the stock will probably trade higher tomorrow. And then other names here that just did well. T-Mobile put up good numbers here. Some of the regional banks, Northern Trust hit a new 52-week high today, and then TransUnion, the credit report company here, hit a new 52-week high on good numbers here. And other stories that are showing up, Boeing right now, as we speak on this show here, is voting. The union's voting on their contract here for a big pay increase, 35% here over the next 4 years. So that needs to happen here. They've got a new CEO in place, and the stock's around 158. We'll see how that trades tomorrow. But it's something people may want to look at here, because it's still a duopoly out there in the plane making business. And then McDonald's, as you noted, that's probably something people should let that play out and be careful about buying it right away. These things tend to fester for some time. And a couple other things here, you got ARM Holdings here is aiming to cut their ties with Qualcomm's chip design license, which is huge because Qualcomm is ARM's largest customer. So that's a big story, and both stocks got hit on the news. Frank?
Terrific, Brian. We're on the air live with Brian Perry with Mint Asset Management, author, by the way, of the 25% Cash Machine. We see McDonald's taking more than $16 a share, hit today to $2.98 and change here, and slightly lower in after-hours trading. Those big cap tech names you mentioned include NVIDIA, down more than $4 at $139 after it hit a record high recently. Apple, of course, has been hovering at or near all-time highs, also taking a hit. As you noted at the beginning here, looks like the Trump trade is on, and we noted on this program, analysts at J.P. Morgan say financial markets are starting to price in a Trump win and a possible Republican sweep, and I believe another investment house is also feeling that way as well. What are your thoughts about the Trump trade? And by the way, DJT stock, which is kind of a proxy on a possible Trump reelection, bucked the trend today, moving higher by $1.52 at 35 and change.
Well, that stock has really come a long way. That was trading just below $12 here. I think just 2.5 months ago. Now, like you said, it's above 35. So that's been one of the bigger wins of the last quarter here, and it really shows that it trades over 50 million shares today. I mean, it's just a phenomenal money flowing into that stock for just a trade on Trump. So I find that to be an interesting way. I don't even know if the company makes money. I just but it's just how people want to play the game. And again, with the Trump trade, these big CEOs. That's why you saw things like Meta getting hit today for 2.5%. I mean, Trump is not really close to the Mark Zuckerbergs and the Tim Cooks of the world there, because Cook is over in China right now, and Trump's he's looking to lay the wood to China further, for imports and on using tariffs. And Zuckerberg's in the last campaign was they were big manipulators of campaign information at Facebook. So there's some consternation there, and so these stocks are on the mend. But I'm sure they'll make peace somewhere along the way and continue to try to do well with the current administration and the new administration, if that is a Trump administration. So beyond that, Apple that came out today, a very well-noted analyst said that the Apple 16 orders will probably be down about 10 million units over the next 3 quarters. So that may rain on this whole Apple Intelligence rollout they're coming out with here in about a week and a half. We'll see about that. But the big cap tech it will always do well. It's just a matter of it ran up here pretty well here coming into this week here, Frank. And I just think it's just taking a pause for the election to see how it all plays out.
All right, IBM, Big Blue, which of course has been around a long time, still known as International Business Machines, by the way, a big blue chip stock, moving slightly higher today, but after hours pulling back about $7 at $225. Of course, they were one of the pioneers in AI with that Watson computer years ago, and now trying to play catch up here. What about IBM here?
Well, they had really good numbers in their software. And, it was an old nickname we used to call IBM. It was called I've been moved, when the stock would really make a big move. And the stock was down because they kind of came in a little bit light on their consulting and infrastructure sales and profit margins there. So, again, still trying to reduce their exposure to their legacy business here, similar to Cisco Systems, a similar kind of a story there, a big turnaround for Cisco also. But IBM has made a big move, Frank. It came from like 155 to 250. And it's pulled back here to around 225 here. This is still a big winner for the last few months here. And the CEO's done a very good job here managing this whole Watson rollout.
All right, and we're watching cryptos here as well. You're watching it too. We've seen Bitcoin see a nice pop lately, right now hovering just above 66,000, pulling back from above 68 recently. Ethereum at around 2,500. And Doge has made a move at 14 cents here. What are your thoughts on what's happening in the crypto world now?
Well, once again, the dollar here having made a very robust move here this past week here, with crypto got up to, but Bitcoin got up near 69,000. And again, I believe it is, going to march its way toward 80,000 here between now and I think maybe by the end of the year possibly. But, when you see a big move like that in the dollar, it tends to take a little bit of the juice out of the crypto market there as a hedge. The one that is really shaping up here and starting to vault higher here is Solana. People should take a look at that. That's made a move from like 140 to 172 here, and near, kind of approaching near its recent highs of the last year. So again, that's an alternative to Ethereum. It's considered to be a much more efficient, utility type of coin. So that's one that I think people may want to look at. There's a lot of momentum there, a lot of volume coming in. So there's something behind this Solana move here, and you never know. It usually means it's something like a Visa or a MasterCard, or someone's going to start to incorporate, their technology into one of their payment systems or something like that. So be on the lookout for that. That looks pretty good.
Very interesting. And then, of course, from so-called digital gold to analog gold, right? We see gold hitting record highs this week. Silver, highs we've seen in about 12 years. What about gold and silver here?
Well, they got a little bit rich here in the last week here. I actually took off the gold miners GDX ETF for accounts that I manage. That came up a lot, and I just think that with the dollar here making this move here, Frank, and I think it's going to stick for a little while here, that you will see gold back and fill. And I think that there'll be another opportunity here. I haven't sold the physical gold, but the miners tend to move two times as fast as the physical itself. So trade the miners, hold the gold, and get another chance here to buy the miners on a dip.
All right. At this point, Brian Perry, let me ask you the big question that we ask on this program here. With the market still near its all-time high here, any specific places where you are putting money now and or taking it off the table?
Oh, certainly, Frank. There's always something to do in a market here. So, I'm adding to my Berkshire Hathaway position here. I think that Warren Buffett and his team are in there buying their own stock back hand over fist, and the stock acts well here. It ran up to 480. It's pulled back to 460. I think it's going to trade at 500 here over the next few months. So look at that. Lam Research again put up great numbers here. That stock has pulled way back with the rest of the chip equipment companies here. So LRCX is up $4 here in the aftermarket, 5.5%. But that's okay to put that on here. That's going to 100 to 110 somewhere in that area. I've been yesterday I started buying back my position here in Samsara IoT as an Internet of Things. This is an AI trade on logistics out there. They've got tens of thousands of customers that help them manage their movements of their freight and their drivers and inventories and storage around the world. So it's a very, very good company. Trades around 47.5, down from 50. Doesn't give much back. Today was up on a down day. That's always a good sign. And then lastly, I'm buying Dell here, DELL, Dell Technologies. They make these liquid coolers for servers for the data centers here, Frank, and also just the whole AI, entourage of equipment coming out. Their laptops, their desktops, their notebooks, and all their communications equipment is all becoming AI enabled. So that's looking like DELL has pulled back nicely here, and I think you can pick that up. And coming off again with this Apple trade, maybe starting to go sideways here if they're going to have lower iPhone orders here going forward here. I took a small loss on Cirrus Logic, CRUS, Cruise. Again, I got out of the GDX today, and I took a profit on Zoom, Video, ZM, Netflix, and the nuclear trade, the URA, which is the ETF, which has been a hot trade lately, but again, it needs to cool off and come back. And again, this market gives you always, it's more of a trader's market now than it is just a straight up market. So, sometimes people do want to trade and also hold, half your position, but definitely can, the volatility is something to take advantage of.
All right, one stock that got attention today, Sprint Airlines surging about 35% on news of a possible merger now with Frontier Airlines. Sprint was reported to be on the financial ropes, and the stock actually closed, up about 46% today, up nearly $1 at $3.08. What are your thoughts about Sprint here?
You mean
Spirit
Airlines?
Spirit.
Yeah, Spirit, yeah.
I said Sprint.
Save,
yeah, Spirit Airlines.
Yeah. Well, the symbol is save, and so this deal did save the airline, from basically going BK. And it's one that you may want to take a flyer on it. It's a flyer. It was up, at $3 today. It's down from 16. I mean, it really got hammered here in the last 9 months. But these things, some of these airlines are a little bit too big to fail. Most of them, they used to fail in the old days, but now they try to consolidate, and you never know. Frontier's an okay operation here, and if they consolidate that, then the stock may be worth, it's maybe worth 5 or 6 in here if they can, get this deal done. So, but that's all I would do with that. It's a revived merger talk situation here, but probably gets done at maybe 2 points higher.
All right, and Frontier, let's see. You remember the days when Pan Am was a gamble and ultimately did go belly up years ago. So whether Spirit follows that or gets some sort of a lifeline here remains to be seen. Anything else in the travel sector that's getting your attention? We didn't even talk about oil yet here, but oil, despite the tremendous nervousness in the Middle East, has not made a big move on the upside, despite the tremendous concerns about what's going to happen there. Actually, oil moved a bit lower today and is still hovering just above, $70 a barrel here at the moment. Brent down more than $1 a day to 74 and change. In New York, oil is down to just below $71 a barrel. What are your thoughts about the transportation names and the oil names here?
Well, sure. I think right now with oil back down where it is here, you can take a look at really high quality names here like Exxon, which ran up to like 125. It's pulled back to around 119 or so. And I would just avoid some of the drillers and some of the refiners here. You just, they're not acting technically well here. If you're going to go with an oil, just go with a big refiner, integrated name, like a Chevron, Exxon, ConocoPhillips maybe. But over in the travel sector, Frank, the you had really great numbers out of United Airlines here, and that's still holding its gain here. That ran up from 60 to 75. So if you're doing it right in the airline business with jet fuel prices down, then you're doing pretty well here. What's more interesting to me here are the cruise lines, because those are acting extremely well. Those are broken out. And so the leader in that group is Royal Caribbean, RCL, which is trading at new highs at 201. But again, Viking, VIK, which people, those wonderful commercials about, taking these river cruises, that they've done extremely well. It's trading around 38, major backlog, for those trips, as well as you're looking at also at Carnival Cruise, CCL, holding it very well at 21 here, ran up to 23. Take a look at that, and avoid the hotels here. Hilton really came in light, so I would just avoid the hotels here, but you can still buy the cruise lines here to pad your travel portfolio.
That's really brilliant. I could talk to you for hours, and I wish we had more time. As always, thank you very much for taking the call here this afternoon, and thank you for your thoughtful analysis as always. That is investment expert Brian Perry, Chief Investment Strategist and Portfolio Manager at Mint Asset Management at mintassetmanagement.com, also author of the 25% Cash Machine. Brian, thanks very much. Have a great evening, and look forward to talking to you again very soon.
Thanks so much, Frank, and let's see those Dodgers make it happen, okay?
Let's do it. Go Dodgers, that's right. 790 KABC. Frank Mottek here. Did you know that for more than 10,000 years, gold has been the greatest store of value and considered a safe haven asset to preserve your wealth? Now with the U.S. debt at more than $35 trillion and climbing, not to mention the Biden administration getting us involved in costly wars, developing the digital dollar, central bank digital currency, and inflation spiraling out of control, it's more critical now than ever before to safeguard your assets like your cash savings and retirement accounts with physical gold. Opening a gold IRA is one of the best ways to secure your wealth and create a stable financial future. Stop worrying about your retirement in the market and cash savings in the bank. Feel confident, prepared, and in control with physical gold and silver. Give Joe Morgan a call right now at 1-800-753-8534. Mention Frank Mottek, and you could get $1,000 worth of silver with a qualifying purchase. Call now, 1-800-753-8534, or visit UnitedGoldGroup.com. Mottek On Money continues in 790 KABC. 790 KABC welcomes best-selling author Dr. Jordan Peterson coming to the Honda Center on February 26. Tickets are on sale Friday at Ticketmaster.com. Right now, caller 9 wins at 1-888-795-2222. You can get a pair of tickets to the show if you're caller 9. Call right now, 1-888-795-2222. Tickets furnished by Live Nation. Stocks moving lower today. The Dow down 410 points. S&P 500 down 54. The NASDAQ down nearly 300. Gold right now hovering at $2,730.80 an ounce. Crude oil futures just below $71 a barrel. And we see NVIDIA shares, the Magnificent One, down more than 4 at 139 and change. Apple down more than 5 at 230.76. Now the latest news here in 790 KABC. Mottek On Money continues here in 790 KABC. The price of gold hit a record high this week, above $2,740 an ounce. Right now, still near that level. Gold hovering at around $2,730 here at last check, up about 32% so far this year. Silver has also seen a big run-up and is hovering just below $34 an ounce right now, up about 42% since the start of the year. Silver at the highest seen in about 12 years. Joining us live now is Joe Morgan at United Gold Group at UnitedGoldGroup.com. Joe, thank you very much for coming to the line this afternoon, and welcome as a new sponsor here on Mottek On Money.
Hey, Frank. Pleasure to be here. Really big fan of the show.
Thank you so much, Joe. And I know the folks are eager to hear what you have to say about gold and silver, given the big run-up we've seen this year.
Yeah, a lot of eyes have been on gold recently, and I'm sure you're familiar, according to experts like Ray Dalio or Marco Kolanovic. According to them, you should be investing in real physical gold to protect yourself right now. I don't know if everyone out there realizes, but according to Bloomberg, right now, central banks, not just in this country, but all over the world, have been buying more physical gold in recent years than they've ever bought in history.
That is an amazing report. Thanks for highlighting that. And so it's no big surprise that we've seen the price make such a big move on the upside. Where do you see gold and silver go from here?
Yeah, that's a great question. Really, the reason so many people are flocking to gold and silver, physical metals right now, is because our financial system is a house of cards, according to Lynette Zhang. Now, a lot of people don't realize it, but the Federal Reserve already lowered the reserve ratios to 0% at the banks. So legally, the banks don't have to keep any of your money on hand anymore, not to mention your retirement accounts, your stocks, your bonds, your 401ks, IRAs. They're all subject to these legal constructs they created, stuff like UCC Title VIII. If you're not familiar with that, that's UCC Title VIII, which actually created something called security entitlement, meaning you no longer own your securities, folks. You own an entitlement. So if anything goes wrong in this house of cards, your entitlement on your stocks, your bonds, your 401k, your IRA entitles you to fourth position in your own money in a liquidation. So if anything goes wrong with all of these parties, what we call counterparties, the banks, the market, your custodian, anything goes wrong with any of these people, they take your collateral, folks, and they can do it legally through UCC Title VIII. Now, I know a lot of you people out there have been thinking about getting gold, and you're hearing about it, and that banks are getting it. Well, here at United Gold Group, what we do is we help people diversify out of the stock market and cash sitting in banks into real physical gold coins and bars, just like the banks are doing. And we can actually help you secure any type of retirement account. Now, whether that's an IRA, a 401k, a 457, a TSP, we can actually get you out of the stock market into real gold, tax and penalty free. Okay, folks, banks right now are saying gold is going to $4,000 an ounce in the short term. Even Bank of America says conservatively gold can hit $3,000 an ounce in the very near term. So you can buy gold just like the banks are doing, and we can actually help you do it. You can do it with cash or a retirement account. Now, gold has been the most tradable and liquid product on earth. According to the banks themselves, it's the only safe haven asset. Currencies come and go, right? Your stocks and your 401k only exist on computer servers, but physical gold coins and bars remain. You can hold it at home, or we can set up a private insured vault for you. And again, you can do it in any type of retirement account, like a 401k, an IRA. And we actually handle all the logistics. We do all the paperwork. That's why we're so happy to be a sponsor of your show, Frank. So I'd really urge anyone out there who's considering making the move into gold, do it while you still can. We've got a pretty pivotal election coming up here. And there are no bad questions, folks. So I know Frank said our number, but there are no bad questions, right? You can call me directly at 213-322-0115. That's 213-322-0115. And if you ask for me, I promise I'll get back to you personally.
That's terrific, Joe. We're on the air with Joe Morgan at United Gold Group at unitedgoldgroup.com. And certainly with prices at or near all-time highs for gold here, there are a lot of consumer choices available, right? People don't necessarily have to buy a 1-ounce coin or a bar. Or there are other ways to get into gold at various price levels, right? What are people going for these days?
Yeah, that's a great question. I mean, really, we can help you get started with whatever's within your resources, right? It's not only for those exclusive 1%ers. Again, the reason that gold is soaring, people, is that the dollars you're sitting on are losing their value. I don't know if you guys realize it, but according to our federal government, 80% of the dollars in circulation have been printed in the last 4 years, right? Even our FDIC, our insurance for our banks, I don't know if you guys saw that an Oklahoma bank just failed, a regional bank at that, and the FDIC announced they're only insuring half of the depositors. So your cash in the banking system right now, it's not there. It only exists on computer servers. So regardless of what you have, right, we'll help you protect it. Again, the U.S. dollar has lost 20% to inflation, according to the Federal Reserve, in the last 4 years alone. Meanwhile, gold's risen over 44%, okay? So if anyone's out there kind of sitting on the sidelines, they've been thinking about doing this, now's the time. The train's leaving the station. There's a reason that banks are sitting on record amounts, more than they've ever purchased in history right now, and that's what we can help you do too. Again, I can help you secure any type of retirement account, any kind of 401k, IRA, stocks, or bonds. Folks, they're only on computer servers, and you don't even own them directly anymore. If anything happens, they can legally be taken as collateral. So if you have concerns with what's going on in this house of cards, I mean, don't hesitate to call us. Again, you can call me directly at 213-322-0115. That's 213-322-0115. And I'd really urge you to think about making the move before your dollars lose any more value, before gold runs up any more, or before anything could happen. I mean, we're really in a pivotal time here, right, Frank?
Yes, sir. Well, Joe, it's great to speak with you on the air here, and thank you very much for sharing that valuable information with our audience here today. That is Joe Morgan at United Gold Group at unitedgoldgroup.com. Joe, thank you very much for taking the call, and we wish you all the best. And again, welcome as a new sponsor to Mottek On Money here in 790 KABC. Mottek On Money continues here in 790 KABC. How is the TV and movie business doing in Hollywood coming off the big actors and writers strike last year? Well, let's get an update now from someone who follows the business very closely, and that is Joe Chianese, Senior Vice President and Practice Leader for Production Incentives at Entertainment Partners, EP, as it's known in show business town, based in Burbank. Joe, thank you very much for taking the call, and take it from the top and give us your view of things here at the moment.
Sure. Well, my pleasure. Well, yeah, obviously incentives and production are definitely in the news these days. Clearly the strike has impacted the consistent flow of production. I think everyone's waiting for things to kick back in again. I think the topic of incentives has definitely sort of come into view as well, given that there's a lot of international competition that appears to be taking away some of our production. But, I always like to highlight that here in the U.S., including California, that we have 40-plus states with incentives, all equally as, as impressive as the international ones. There are obviously creative reasons why productions go ashore, but, productions have a lot of choices these days. And here in the U.S., we've had incentives since 2001, outside the U.S. a little longer. So, it's definitely an interesting time in the world of film and TV production.
Last year, we saw production, shut down even 6 months before the actual strikes occurred, right? And then we went through the strike time, and things have not gotten back to normal yet?
Yeah, it's interesting because we had clearly a boom in 2018, 2019, just before COVID, with the streamers really kicking up and creating content. So they were calling it the golden age of television, where production was just sort of going gangbusters here in the U.S. and around the world. Obviously, COVID hit. Production came somewhat to a standstill. I think we still saw production happening in remote places in the U.S. and outside the U.S. And then, again, another boom when COVID was behind us, and then we had the strike. So we've had two big hiccups. And then we had the studios, officially claiming that they're sort of, I won't say stepping back, but sort of revisiting their plan and figuring out how and where they're going to spend their money. So we're all sitting tight and waiting to see where they all go.
All right, and AI was a big issue during the strikes, and some agreements were reached. How is that impacting business in Hollywood at the moment?
I mean, I don't think, well, from an incentive perspective, it isn't, and I don't think quite that technology is quite there yet. There are certain jurisdictions, I think New York State is one of them, and I think it might even be in the UK now, or somewhere internationally, where if a production utilizes AI in some capacity and it affects the hiring of labor, that expenditure will be disallowed. So I think that's being factored in little by little into incentive programs, because at the end of the day, these are really just job creation acts, in my opinion. They either create or maintain jobs, and also indirectly support the economy in each either state or country by producers just spending locally, either directly with vendors or spending their per diem in hotels and restaurants.
I'm going to be doing something with the Hollywood Chamber of Commerce at the end of the month, and love to share what you're about to say here. How is the incentive situation here in Hollywood? Are we attracting, as we should, the movie business and TV production as well, or is the competition so intense now that we're behind the eight ball here?
We are. I mean, the thing about California, and it's not just unique to California, California has a program with $330 million a year, so there's a limited amount of money that the state gives away annually. And so that money gets used up every year. And the way the state does that is they send out that money, or they take applications in either 3 or 4 tranches throughout the year, so that money gets spent equally throughout the year. So, it's a good program. It's not the most competitive, but it's a very valid program. California also has, if you compare it to other places, the best infrastructure and the best crews in the world. That also accounts for reasons to stay here. But then you compare it to a state like Georgia that has a program with no annual cap, or the UK that has no annual cap, or Canada. And so you have producers thinking, I can bring a project somewhere and I don't have to worry about a program running out of money. And that's especially relevant for television, right? If you go somewhere and you set up a show and it's a hit, you want to be able to stay there and not have to move it from one state or another country.
And then there's Budapest, right? Also coming up big.
Well, it's funny how Hungary is getting a lot of. Hungary's been around for a while, at least 10 years, if not longer. It's definitely a good program, And what's great about Hungary is that infrastructure built up around it. There were already studios there, but that's what incentives does, right? Not only does it build crew and support infrastructure, it creates infrastructure with the development of sound stages. So, yeah, Hungary is very much a go-to destination, as is, the UK. We hear about the UK and Canada, but Italy, over the last couple of years has seen a boom. Australia, Canada as well. I mean, the U.S. is busy, but again, you have options, and there are creative reasons why productions do go overseas or up into Canada.
All right, for anyone that wants to connect with you on these various incentive programs available here to keep Hollywood in Hollywood, we don't want this runaway production to continue, or ran-away production even at this point. Joe, what's the best way to connect with you guys there?
Well, you can always reach me through Entertainment Partners, and I encourage listeners to go to our website. We maintain a very thorough summary of all U.S. and international incentives. So if you go to ep.com, you can go to the incentives link, and you'll see a worldwide map, so you can click on any state or any country that has an incentive, and you'll be able to get a sense what's offered. And you'll see that we have a comparison tool, so you can compare California with other of the jurisdictions, and we are competitive. I would say the only thing that is a disadvantage is the cap on our annual funding, at least the cap as it stands right now.
Joe, thank you very much for that important update this afternoon. That is Joe Chianese, Senior Vice President and Practice Leader for Production Incentives at Entertainment Partners, EP, based in Burbank, live with us here on Mottek On Money on 790 KABC.
Check out the podcast that inspired Taylor Sheridan's latest series, Landman.
There's a stretch of road in an oil-rich region of West Texas. This region of West Texas, known as the Permian Basin, is in the midst of the biggest oil boom in history. This is a story of roughnecks, billionaire wildcatters, and wannabe dreamers. My name is Christian Wallace. From Texas Monthly and Imperative Entertainment, this is Boomtown.
Boomtown, wherever you listen.